please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome to Morning Call. It's Christmas time and we are in full festive gear here in CNBC TV18. On behalf of all of us in our team in CNBC TV18, let's wish all our viewers a very happy Christmas, start of a great weekend.
Oh yes, Merry Christmas to everyone. And of course, this year Santa Claus has been really nice. The mid-cap party is well and truly on. Not just this week, but this year, the index is up 40%. If the index is up 40%, imagine what would portfolios have done. I mean, even the dumbest of portfolios, if you just invest in the mid-cap ETF, you're up 40%. So
Absolutely.
Good portfolios making a lot of money.
And as well, a lot of money came into the banking system from probably cash lying under pillows or wherever.
Yeah.
So there have been a lot of people who have taken advantage of this rise in stock prices. In fact, Nigel has this excellent series going on where he's speaking about high performers. So many of them are, 600, 300, 400% higher. So clearly, if you had even one pick right, you could, and really you couldn't have gone too terribly wrong in this market. So clearly, the market, I think even today, the Nifty looks all set to go into Christmas weekend with a record. I mean, it didn't give up much yesterday, 1 or 2 points. And today you also have the global tailwind behind you. And therefore, perhaps we can actually have good reason to have Christmas cheer at 3:30 when the market ends. I wouldn't be surprised at all if it is a fresh all-time high. But mid-cap party, I mean, we have to bring the but. That's what the media is for. I'm a little worried about the way in which the mid-caps have risen. The kind of, the quality of the stocks that have led the rally yesterday and day before are deeply leveraged stocks. They're stocks in some serious trouble, many of them, obviously not all of them. So while some of them definitely this year deserved the kind of rally they got, I would worry about the rally in the last 2 days. At least, a dozen stocks which rose are stocks where I would hope that people find some other sucker to hand it over, but somebody is going to bear this pain.
The bigger fool theory, right? Yesterday we were talking to the management of Elecon. The stock was doubled in 3 months and it was a loss-making company, and it didn't look like it was turning around. But that will happen, Lata. In a liquidity-driven bull market, that will happen. And that hasn't stopped the market from going up. It's not the first time that we've seen. And there's a reason for the last 2 days of rally. And I tell you why. This week, the mid-cap index is up 4%. The Sensex is up only 0.9%. If you look at the gross domestic numbers overall and the gross FI numbers as well, they have come down quite a bit. So obviously, a lot of people have gone on holiday already. So even from the DI front, that large buy number mostly is on account of Motherson Sumi block. I think the promoter sold, and I think DI would have bought it. So, as institutional volumes decline, the mid-cap party will go on. I think if you were worried about quality yesterday, you would be more worried by quality today. That happens. This is that kind of mid-cap party. 12 F&O stocks were up between 5 to 25% yesterday. So, but I take your point that at index level also market is fine. And yesterday was weekly options expiry. That irritant is out of the way. So today the Bank Nifty may rally. That's been the template of last few weeks. On Fridays you see Bank Nifty outperforming after having underperformed, for the past couple of days. Further expansion for the market would happen if the Nifty closes above 10,500. That could happen. That would straight away, leave the door open for the next
then
round
it's blue skies.
10,800 maybe would happen. But yeah, we need a close about 10,500. But my limited point is that this right now, you go through, in cricket parlance, you go through pitches where, regardless of how the bowler is, the batsman can hit all deliveries for
Green
sixes.
Park, Kanpur always has the largest number of scores. All records are made there.
Right now the market is going through that. You're getting full tosses. You have to score because you will get bouncy wickets as well. Right now you're getting loose deliveries.
No, but in cricket parlance, it ends in a draw. In markets, it can end with a bit of blood on some some vulnerable hands.
Yeah, I mean, it
and
happens,
one only
right?
hopes that 2018 doesn't start with this kind of...
yeah, I mean, Sehwag also gets out on full toss on, boundary. That will happen, but, you will make money in this market. I mean, you should not be losing money in this market. It's that kind of mid-cap frenzy right now.
Well, this kind of complacence scares me, Aluj. I hope the market doesn't get into that. If there are a few more skeptics, then perhaps the market will watch out what it is sending to all-time highs or to, 20% gains and 10% gains in a single day. We'll, of course, have to discuss both the robust nature of the rally and the cats and dogs that are running with the rally. All that will be discussed in the next 2.5 hours on Bazaar. Let's take a look at what wise men are telling us before we start trading this morning. It is Friday, and you would get the wise statement from Chris Wood of CLSA. He says the Gujarat verdict is bad news for those foreign investors who are not as overweight on India. Greed and fear is already 3 times overweight on India. So that's a very positive comment coming in.
Short and sweet, but obviously the message is loud and clear from Chris Wood. In terms of money market, we have Bhaskar Panda of HDFC Bank saying the dollar index staged a minor rally yesterday, but that may not have too much impact on the USD INR as inflows dominate. He expects the range of 63.85 to 64.10 to hold for the day. Rupee, of course, has been remarkably strong.
Absolutely. Less than 64 to the dollar. On the bonds, Bhaskar Panda adds that Indian 10-year benchmark yield is steadily moving towards the 7.25 mark, expects it to remain elevated. As you see, yesterday itself, we saw that 7.25 mark prevail for a better part of the day, actually.
Okay, let's go across to Mangalam then for the world view.
Well, Christmas is all about green and red, and so are our markets. There was more green than red in yesterday's trading session. So the US markets, they eked out some gains. Dow at the high point of the day was up around 125 points, but though it fell off from the high point of the day, managed a gain of close to 55 points itself. A couple of companies that were in focus, and that is because they said that the money that they will save from the tax plan, that will go to all the employees in terms of higher pay and bonuses. Comcast, which is the international parent of CNBC International, that one said they will give higher pay and higher bonuses. Boeing also said that. AT&T, Wells Fargo, both those stocks were up because they believe that they will share more money with the employees. Experts for the markets say that the Santa Claus rally is continuing, and this will continue, prevent the pullback until year end itself. Across the Atlantic, in the European markets too, we saw a fair shade of green. The FTSE, which is the British index, ended at record high itself. Nokia, those shares gained about 4% because they've signed a patent licensing deal with the Chinese company Huawei. Talking about higher pay and bonuses, let's flip it over. Deutsche Bank, they said they will cut up to 1,000 jobs, and that stock was down in trade yesterday. This, remember, is as a part of the integration that they will have with Postbank. Spain, that one will be in focus. Political risks come back again. The pro-independence parties claim victory. The Catalonian votes started last night. We'll keep an eye out on that. As far as the emerging markets pack is concerned, the Brazilian index, that one saw a gain of 2.5%. Metals have rallied on account of the weaker dollar. Asian markets, again, more green than red. And the SGX Nifty indicating an absolutely flat start.
All right. Yeah. Go ahead.
Okay, Mangalam, thanks a lot for that. Well, let's get some opinion then on global outlook for 2018. Maurice Obstfield, chief economist to the IMF, says that he's worried about the rising levels of global debt.
It is true that growth is, well, it's much improved. It has been tepid. It's much improved. But remember that interest rates are very low globally, and that has a first-order impact on asset pricing. And we believe that those low interest rates are supporting high asset prices. Of course, there are also factors in some countries that are country-specific, like the anticipation of corporate tax cuts in the United States. Well, I think we do worry about the increasing levels of global debt that are being, in some cases, fueled by a search for yield, in some cases fueled by just the ease of borrowing terms right now. If, for some reason, interest rates were to rise more quickly than people anticipate, that could cause a financial stability risk. So we're watching those debt levels very carefully.
Okay, well, I spoke to actually 2 people who watched the global economy very closely. Maurice Obstfeld was one of them, and Geeta Gopinath was the other, the professor of economics from Harvard. Maurice, neither of them are really worried about the asset price rise that we have seen across markets. But Maurice was definitely worried about the rising global debt levels. And that doesn't quite square with the kind of rally. But Geeta was way more relaxed about both global growth, very confident. Both economists were very confident of global growth. I also had a conversation with Geeta Gopinath, the professor of economics from Harvard University, about her India estimates. She thinks, of course, now 8% has become a bit of a distance. It's not round the corner, though India may stabilize around 7% GDP growth, she said.
I would never say that 8% is around the corner. We seem to be, like you said, undershooting it for a while now.
Yeah.
I think 6.7% at this point.
Is the forecast for FY18?
That's right. So I think that in that range, kind of between 6.7 and a little over 7% is where I expect growth to be.
Okay.
The policies and reforms that have been undertaken are not it's not like fiscal spending where you kind of see an effect much more quicker. It's going to take a little longer. Things like ease of doing business, GST reforms, bankruptcy reform, all of that are kind of more slow-moving factors. And so, but the important thing to keep in mind is that this is in the right direction.
Okay.
And that's great.
Okay. What do you think the government should do in the budget? You referred to fiscal spending. Would you like to see more of it?
No, I would not like to see more of fiscal spending. I think that India has won a lot of points for being fiscally responsible, and you certainly don't want to squander that.
Okay.
Now, it's always an interesting argument that maybe growth is even higher in the future than it is now, and so we can spend more. I would be a little cautious about that because growth rates in India haven't hit the 8% target at this point. So I would not push for that. I think fiscal conservatism has been good.
Now to come to the theme of 2018 globally, and here it mingles with the domestic theme. How do you see commodity prices? If global growth is as optimistic as you sounded earlier,
right.
Where would crude go?
I think the projections are that crude will go up some more, but nowhere near where it was before it kind of crashed in 2014, because there are many other sources of supply. There are many other low-cost producers. Like the U.S. is now a big producer of oil. So I think and they're able to very quickly increase the supply. So in that sense, I think there's a very natural upper limit on where crude prices can go.
Okay. So if it goes towards 70, how do you look at Indian inflation itself, given the backdrop of even crude straddling $65? Do you think we have troughed out on inflation and we should now start worrying domestically?
For India, the pass-through of crude prices into inflation is very high. So the headline inflation numbers are always going to look worse. The RBI, of course, focuses on on core inflation, which excludes these prices, and so they should keep in mind that monetary policy works with lags, and so in that sense, they certainly don't want to make a policy change right now, and then if crude prices adjust in the future, they're kind of behind the curve. So it is an issue. It is an issue. Now, I know that the RBI also pays a lot of attention to inflation expectations, and their most recent discussions flag the fact that inflation expectations have gone up. It's kind of interesting because what we've seen is that people are things like fuel prices are very salient. Food prices, vegetable prices are very salient to people. And so that can feed into inflation expectations very quickly.
Okay.
But to the extent that the RBI doesn't have much control over those prices, it should maybe kind of take that with a grain of salt about how inflation expectations are responding at this time.
Okay. Well, actually, among the minutes of the meeting of the Monetary Policy Committee, there was a reference, I think by Viral Acharya, that the inflation number could be above the 4% mark, 4.5% mark,
right,
for a better part of 2018. If that were the case, should the MPC hike rates or shouldn't it?
I see an argument for not raising rates at this point, for sure. I mean, there is the band of the plus or minus 2 percentage points. And given that growth is still, it's not as if it's growing at 8% at this time, I certainly wouldn't make an argument for raising rates.
It's time to drill it down to micros, and as Anuj has been pointing out, it is individual mid-caps that have lit up the markets, as it were, in the past entire week, actually. And that should be the case today as well,
That
Anuj?
should be the case as well, Lata. Maybe in the last hour there's some move on the index as well, but today the volumes are going to be lower. especially from the foreign desk. That's one point. So a lot of individual stocks may do well. CESC is a stock which had a big bounce yesterday from 20 and 50-day moving average, and there was quite a bit of buying in cash and F&O. So that's my first stock to watch. It's a stock which has had a big run, then corrected, and is now bouncing back again. Dish TV. I don't know. I mean, there's a good chance that it might be ending its bear market. Okay. It went through a terrible bear market. It's showing signs of ending that, but it's a high-risk sort of stock because it's trading at the cusp of 200-day moving average. So it's important to take that out somewhere around 85, 86 for it to have some kind of momentum. But we are in a mid-cap market right now.
If there is any day when risky stocks should rise, today is the day, or this is the time. I must say, as you point out, the FII desk will be weak in terms of volumes. It's about time we said that about the Indian desk as well. We should stop taking money making so seriously and learn to enjoy the money that was made this year. At least everyone is in the money. Okay, Anisha, I think the stock of the morning is going to be the one you are looking at.
Well, yes, very good news coming in for the IT sector as a whole, and especially TCS, because the company has backed the deal of the $2.5 billion that is with Nielsen for the outsourcing business. Now, remember the first time the company got this business was back in 2007 for around $1 billion. And since then, we have seen multiple extensions. But why this is important this time is because this is the first time after Mr. Gopinath has taken over as the CEO. And it's just within 10-15 months that this deal has been renewed. So it comes in and even comes in with a better picture, because if you look at the renewal numbers that they have given, the company beginning 2017 to 2020 will be getting a revenue of $186 million annually, and from 2021 to 2024 they'll be getting $139 million annually. So clearly telling you that it's front loading of revenue that has happened, and that should come as positive for the company as well. Back to you.
Okay, Anisha, thanks a lot for that. But of course, apart from TCS, yesterday we had Accenture's numbers, and there is some read-through for Indian IT as well.
And the read-through is positive because if you look at the Q1 numbers, they came a tad bit better than the analyst expectations. Q2 guidance as well, they have given at $9.15 to $9.4 billion, something that the street was working with. But what is good that the organic growth in constant currency terms this time was around 6.5%, and it came in from all the verticals. It was the secular growth that we had seen. US business did well for them, as well as did consultancy and application services business as well. They have in fact revised their guidance upwards, a tad bit upwards, because they've raised the lower end of the guidance now to 6 to 8% versus 5 to 8% earlier. Now CLSA says that the Indian companies usually are mid to late cyclical and may lag this trend, but ultimately the nature of demand favors Infosys and TCS, Infosys and HCL Tech. So I expect the IT sector to remain in green today.
Okay, thank you very much for that. IT could lead the way despite the fact that the strong rupee is not going to favor them. There is improved demand for that sector. Another stock which could well be the stock of the morning is Dalmia Bharat. Nigel, tell us why.
Well, Lata, Dalmia Bharat has been the big outperformer from the cement space all through this year. That's because the street was expecting them to do some acquisition, and that's precisely what's come about. Now, the COC, that's the Committee of Creditors, they've approved the plan that was set forward by one of the subsidiaries of Dalmia Bharat. So it's more or less almost a done deal. Now they require the approval of the NCLT, and in fact, this deal is almost done. The consideration that they mentioned is around 400 crores, and they've said it's around 1.7 times higher than the liquidation value. But this deal looks really good. Why? Because Dalmia Bharat till now, they were primarily, in the northeast as well as in the south markets. Now this is giving them a new geography. They're going to be looking at the west as well as central. So that's going to be very, very good news. What we want to know is that 400 crores, yes, they'll be paying, which will amount to a haircut of nearly around 75 to around 78%, which is good news for them because Moodley had a debt of around 1,800 crores. The big factor we want to know is how much more money they need to pay to get this plant up and running. Dalmia Bharat should open up in the green.
Okay, Nigel, thanks a lot for that. Should open in the green. But Lata, what about PSU banks on this RBI report? Should they open in green or red?
Well, actually, I'm trying to guess. I think the banking system gets a bit of a clean chit from the Reserve Bank. Let me tell you what this report is. It's the Financial Stability Report. Basically, what all central banks are supposed to do under Basel rules is they have to stress test the financial system. Suppose inflation went to 9%. Suppose the rupee went to 70. How will your numbers look up? But we're not really worried about the stress scenarios because that could be, a little hypothetical. But what is the baseline scenario? Now, first, the historical numbers. The RBI points out that GNPAs of banks, gross NPLs, have risen to 10.2 from 9.6. That is as of September. And stressed advances have risen to 12.2 from 12.1. Now, I see that number as very positive. Look at the stress in the system. It's only risen from 12.1 to 12.2. And the next line is the best. The baseline scenario for the future, GNPAs are set to rise from 10.8 to 11.1. That is the worst case as a baseline scenario. Now, if your total stressed assets in the system is only 12.2 as of now, and in the future the Reserve Bank expects 11.1 to be recognized, then you don't have much more stress that is left to be recognized. So for the system as a whole, it's positive. But when you look at the PSU numbers, it's not really that positive because the number already is 13.5 as of September from 12.5 in March. And if you looked at their stressed advances, it is 16.2 versus 15.6. So now from 13.6, the total stress is 16.2. That's a distance that they have to recognize. So for PSU banks, I'm a little worried. I would put it as red. But for the banking system as a whole, for Nifty Bank, which is largely, you know, a more private bank index, there it looks like it'll be a green. So mixed PSU, I would still give red, and Nifty Bank green.
Okay, interesting. Interesting report yesterday on wind tariff as well, and that would have some repercussions. Of course, we have only few listed players now, but Anisha, what's the report saying?
Well, yes, it's a new low yet again for the wind tariff. It has come down to 2.43 per unit now. Remember earlier the bid tariff was 3.46 in the month of February. It went down to 2.64 in October. And now we have hit a new low of 2.43, which is even lower than the solar tariff rate that we have. Now, of course, it is good news for consumers like you and me, but it raises question on the economic viability of the projects, because remember, this will put pressure not on the generating companies like Adani's and Tatas of the world, but will also imply more pressure for the likes of the wind turbine manufacturers like Inox and Suzlon, because the entire working capital cycle will now get stretched. Their margins will get compressed a bit. So that is the key thing to watch out for, because a lot of experts say that at 2.43, the project IRRs won't be that strong.
Yes, and you know, the big problem with a number like this is that, as we have discovered in the past, state discoms tend to tell legacy projects that you come and match this. So I do worry for power companies, especially wind power companies, because if you don't respect your contract, you know, capital cost was higher at that time, but that often is lost because politically it's very attractive to say that you match the lower rate. So I would worry about wind power companies when rates fall so drastically. Well, Ekta, Biocon?
Well, yes, I'm looking at Biocon because, Lata, you know, reports are indicating now that the company could probably, you know, take the Biocon biologics business public to raise about $500 million. There are a lot of buzzwords about the fact that it could probably be even listed overseas. And we had spoken to Kiran Mazumdar-Shaw, where she did mention that there would be some plan to monetize the biologics business. So it is probably taking some amount of steam now, with reports indicating that it would probably be something that the company would look at seriously. Remember that they just received shareholder nod to transfer the biosimilar business by slump sale to Biocon Biologics in a similar way that Syngene is a separate entity for Biocon. Biologics would also be a separate entity for Biocon.
Okay, Ekta, thanks a lot for that. Biocon, of course, is at lifetime highs. Been a strong run for the stock. Ronit, why are you watching out for Aarti Industries?
So yesterday the board approved a buyback of their equity shares. So they're going to buy back around 8.2 lakh shares at 1,200 rupees versus the current market price of around 1,046. So that's around 17-15% upside from current levels. But also the promoters will participate in this buyback, and the overall acceptance ratio will come to around 1%. So you know, on the back of this can accept a light green on the stock today.
Okay, that's short and sweet. So positive, approves buyback. Sonal, why are you watching for ENIL?
Well, Motilal is bullish on the stock, and they've upgraded the stock to a buy but have maintained the target price at 910. What they're saying is that in Q3 they expect a 14% growth in their revenues, majorly because of a lower base and also because of the new show they have come up with Karan Johar. On a longer term, over next 3 years of scenario, they expect a 15% CAGR for revenue and 29% CAGR for the EBITDA, and the break-even of the new stations that they have come up with in fourth quarter of FY18 will be quite positive for the company. On the back of that, I expect the stock to be in green today.
Okay, so they break even in the fourth quarter is what you're saying?
Yes, that's what the management thinks, that they will be able to break even by fourth quarter.
Well, the flood of advertisements of Karan Johar gave me the impression that it could take longer, but I could be wrong.
Okay, that's ENIL. But yesterday, you know, Abhishek was talking about Canpin Homes. And of course, this morning there is news that Canara Bank is looking to sell 4%.
So Anuj, Canara Bank actually holds about slightly above 30%, and that they are looking to bring down to 26% by selling off 4% stake. So at current market price, this works out to close to 271 crore. What this means for Canara Bank is that to its tier 1 ratio, it will add about 7 basis points, and that will move to about 9.05%. And to the book value, it adds about 4.5 rupees per share, and that moves to around 576. Interestingly, India Ratings and Research has placed Canfin Homes under rating watch negative due to this equity issuance. They have a AAA rating on the long-term NCD issuance of Canfin Homes, and they have mentioned that they'll wait on the clarity of this transaction with respect to shareholding pattern, management control, board representation, branding and inherent credit profile. Back to you.
Okay, thanks a lot for that. So this would be positive for Canara Bank because it makes a little money. But for Canfin Homes, there is a little bit of liquidity coming on. But I guess the way in which that stock is roaring, it may not hurt them so much. Mangalam, breaking biscuit with Britannia?
Lata, Christmas cookies today, as far as Britannia is concerned. So
cakes as well.
Cakes as well. Okay, so Motilal Oswal, they've written on Britannia, they said that, you know, the latest development in the company, which is launching of low-priced cream cookies, that would increase their volumes going forward because the company has done well as per Motilal's channel checks in a difficult operating environment. So this recent development is positive for their volumes, as a result of which they've increased their target price from 58.50 to about 60,100 rupees. And whenever we talk about Britannia, watch out for Bombay Burma as well. That one holds about 50.7% stake in Britannia and moves in line with Britannia.
Okay, thank you very much. Though I would think that a large part of Britannia's profits must be coming from my house. We can't do without Marie Biscuits and Nutri-Choice. Though I don't know, I mean, which brand it is. Okay, let's quickly recap our top stocks. Stocks expected to gain are TCS, Infosys, HCL Tech, basically the tech stocks. Dalmia Bharat, stock of the morning. CESC, Dish TV, SBI. Okay, I would be a little wary about SBI, PNB, Bank of Baroda. Whether they would rise. The bank index, Nifty Bank definitely rising higher. Aarti Industries, ENIL, Biocon, Canara Bank, Britannia. Stocks expected to be under pressure. Adani Power, Tata Power, Suzlon, Inox Wind, and maybe Canfin Homes as well.